Let's talk to Nicole Elliott. She is a private investor and technical analyst. Very good morning to you, Nicole. Now, I feel as if this segment is about me going on holiday this year because we're going to cover cable for my American holiday, Sweden for my Swedish holiday, and Turkey for my Turkish holiday.
You've got them all lined up already, have you?
This is my Groundhog Day. Let's kick off with the Great British Pound against the US dollar. Is it a Great British Pound right now?
Well, the reason I've picked the currencies today is that, rather surprisingly, Donald Trump has got a new economic advisor. Mm-hmm. His name is Larry Kudlow. Kudlow, I think you say it. And I mean, he's a TV pundit. You know that. I know that. We're all media stars. And gosh, he's a really big one. And he's come out already. His first interview was, needless to say, on CNBC, where he's worked for donkey's years. But he says, I would buy King Dollar and I would sell gold.
Okay.
Right, as the president's right-hand man, is that the sort of thing you'd expect him to say?
No,
I mean, it's wrong. Then he also added that the Fed should not overdo interest rate rises, and that economic growth is not inflationary. And he says, just let it rip, for heaven's sake.
Okay.
This was yesterday. I was like, wow, okay, so if it's going to rip and he's going to be sort of single-handedly managing financial markets, best we keep on our toes, haven't we, and see what he's up to.
Okay.
So if it is King Dollar, well, I'm going to say, what about Queen Pound then?
Very good.
In that since the referendum, which is that huge spike on the left-hand side of the chart,
yeah.
The result of the referendum, rather, and you can see everybody got it completely wrong. In fact, the pound has been on a tram track, hasn't it?
Yep.
Absolutely. And yet still most media people, most economists say that we're going to hell in a handcart because of Brexit. Well, hang on a minute. How much evidence do you need to change your mind that you're wrong?
Yep.
And I would say this is a very steady move from still cheap levels. The pound is still cheap. So much so that London is now in 30th position in terms of how expensive it is for international travellers to come here.
Okay, well that's
good. We're below Hamburg, for goodness sake.
Okay.
I mean, well below Singapore, that's the most expensive again. Oslo, Geneva, Zurich, the usual culprits, plus Hong Kong, of course, I mean, it's cheap here, and so the pound is cheap. So while, this king-queen analogy might be incorrect, I mean, the Queen has still plenty of room for manoeuvre, hasn't she?
Okay.
In terms of our cable chart. So I would say onwards and upwards, and it's a very steady move. It's not, it's not reluctant. It's just one step at a time, which is quite good if you are hoping for a continuing trend.
Understood. Okay, let's move on to the euro against the Swedish krona. A clear uptrend there on the quarterly charts.
That's right. This is a super long-term chart where on the left-hand side, the higher you go, the more Swedish krona you need to buy yourself €1. So in other words, the krona gets weaker the higher you go. And yes, absolutely, you can see it's been relentless since 2012, which I think will come as a surprise to many people because the Scandis are often sort of put up as the poster boys in Europe, not, generally, including Norway, and, the economy's doing well. They've got negative interest rates. The Riksbank has set negative rates since February 2014. They were one of the first to go negative, well before the ECB did. So obviously that's in part to blame here for this persistent weakness. Again, the poster boy image is perhaps slightly incorrect because, I mean, they have had a pretty torrid time. As you can see, there's sudden, fast moves up in the financial crisis 2008. And before that, in the early 1990s, they had another banking crisis there. So, do you know what I mean? This is not quite so good. If it's the 15th of the month today, so if at the end of March, which is the end of my quarter, I get close above that 50% retracement level,
Yep.
I think this might go off to the races again and drag the Norwegian krona with it too, the two of them. At the moment, it's Sweden is relatively strong against the NOK. But Noki Stocky, you see, which is a very important link between those two nations, I think it might impact on Norway as well.
Understood. Let's wrap up now with the Turkish Lira.
Now, this is a weekly chart going back to the beginning of 2016. It's not as neat as the cable one, but you've got that feel to it that you have a sort of lurch and then you pull back to the 50% retracement level. And that's what we saw, quite a sharp move at the end of 2016. 2017, it was a lot steadier, but then it had another lurch in the final 3 months of 2017, and now we've pulled back a little bit. 50 and 200-day moving averages suggest that you'll need more and more Turkish lira to buy yourself a dollar. This is a dollar. And that's, interestingly, despite their overnight lending rate set at 9.25%, and their late liquidity money at an eye-watering nearly 12%. Wow. So, I mean, there's a problem, and the problem is inflation.
Understood.
Quite simply. So, and the other thing with these sort of numbers is the bigger the number, in order to maintain the pace of your devaluation, you're going to need to devalue by more and more lira all the time.
Yep.
Yeah, it's just the law of big versus tiny numbers. Yeah. So what I would expect here is for the pace to pick up over this next 3 quarters.
On that note, Nicole, thank you very much for taking time out for us. We'll see you in 2 weeks' time. That's Nicole Elliott. Thank you.